Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Julian Emanuel with his Chief Equity Quantitative Strategist at Evercore ISI with an incredible note. I can't say enough about this. I mean, is Stephen Fandozzi doing all the work?
He's doing a lot of work.
With the summary paragraph you have, which is like 10 sentences long, maybe 8 sentences long, how do you create the math? How do you collate in your summary where earnings are modeling up 15.6%?
It's, really taking all the statistics and extrapolating the potential surprises and the beat percentages. I mean, there's an enormous, as you know, amount of statistical work that goes into it. But the bottom line is, this is another extraordinary earnings.
You even look like Bill Murray. It's Groundhog Day. Every 90 days, the world's coming to an end, Paul.
Yep.
And then Julian goes, no, double digit. What a shock, double digit.
Double digit. Julian, so what are you looking for in earnings? What do you think the market's looking for in earnings this period?
So the issue with the start of this season is there was an expectation that it was going to be strong. It's actually incrementally stronger than expected. But the reason the market hasn't gone, streaming through 7,000 on the S&P is that after the last several quarters, where you had surprises on the order of 6% or so above the baseline expectation, getting you to that double-digit number, we thought it would happen again. Okay. It is happening again. But the underlying message is it sets the table for 2026 very effectively.
Julian, starting late October, early November, we started to see a little bit of a rotation in the market. Maybe out of some of the tech names into some of the more value, maybe small and mid cap. Is that a longer term trend? Is that something we should play in 26? How do you think about that?
Well, from our point of view, it actually started when healthcare started to recoup the underperformance of the prior year when the government shut down the first time.
Okay.
I've lost track of the number of times the government shuts down. And then what you got toward the end of the year was the start of the rotation away from technology because you had some disappointment on earnings and you had concerns about debt. And then to start January, it's very typical for these areas to outperform the prior year's laggards. In our mind, it is one of those things that in projecting 7750 at year end 2026 on the S&P 500, technology, because of the weighting in the index, the math drives the fact that it should, and in our mind, there's enough negative sentiment for the wall of worry to be overcome that it will regain the leadership.
So for tech to regain that leadership, is that simply a function of that's where the earnings are? That's where the cash flow growth is?
Well, it's that, but if you look at the last few weeks, it's also where the speculation has not been. Okay. So in fact, the fact that it's come off the boil in gold and silver is likely going to be a tailwind for technology.
Julian Emanuel, Evercore ISI with us, a lengthy conversation to get us started. We're on YouTube. Subscribe to Bloomberg Podcasts on YouTube, growing each and every day. We had some youngsters over. The kids had some youngsters. They're so hip.
Yeah, of course.
They don't do YouTube.
No?
They spent the whole time talking about Bruno Mars and the Grammys.
All right.
But, we're on YouTube. We're doing a digital distribution there. Tell me about revenues. I look at Pepsi. They're cutting prices on Cheetos and all that. There's a real battle here to sustain a nominal GDP revenue stream. Are we?
It's actually stunning, quite frankly, that revenue looks like it's going to come in north of 7% growth.
Blended S&P 500?
I mean, it's
you and I have never said that.
No, yeah, and it is really points to the extraordinary resilience of the economy, and frankly, again, this idea that as uncomfortable as it is when we see this affordability issue, the fact is that for now, and this is changing at the margin because of this kind of commentary, is that as long as the employment picture is as strong as it is, revenue can continue to be as strong as it is.
What do you see about use of free cash flow? I got a 4% dividend lift at Pepsi. They announced not an Apple-like share buyback, but nevertheless, are non-tech companies getting like Apple, where they're trying to really deploy cash to shareholders?
No, and that's an ongoing trend, but accelerating again, because when you look at 2026. What you see is a macro backdrop where you're going to have, stimulus via the one big beautiful bill. You're going to have stimulus via 2, maybe 3 Fed rate cuts. And so you really don't need to have the war chest ready, as corporate America does from time to time, in anticipation of a market slowdown.
Boy, Tom, I'm looking at another big tech name, Palantir Technologies, forecast revenue for fiscal 26. That's expected to grow 61% this year. Holy cow. Yeah. So the stock's up 11%.
Dan Ives has been on that, hasn't he? I don't even know what they do.
No,
I mean, I'm in the triple leveraged all cash fund, so who cares? But I look at folks, I'm not going to mention the name of the company, but I got a bellwether toothpaste company that I just sort of use. Paul, it's popped in like 2 weeks, up 20%. Yeah. A boring toothpaste company.
Yeah, a little rotation there. But
because, rotation, and also I think use of cash.
Yep. Julian, we saw 2025 U.S. equity markets did very, very well, but many markets outside of the U.S. did way better than the U.S. How do you think about the U.S. versus rest of the world from
So that actually goes back to Tom's last observation on the toothpaste company. Part of that was the fact that the U.S. dollar has fallen as far as it has over the last year, and that, Paul, has driven a lot of this outperformance of the rest of the world. In our mind, the dollar did make a significant multi-year peak last year at about this time, similar to you had a multi-year dollar downtrend from 2001 to 2007. And the bottom line there, and we think the bottom line over the longer term here, is that you saw rest of world outperformance over that long period because of the dollar weakness. Now, what we would say here is that it is not likely that you're going to have a dramatic rest of the world outperformance kick in until the AI trade peaks. And, we believe the AI trade has a lot further to run.
About just valuation in the market, how do you frame that conversation with your clients these days?
Well, the last year has been a transition, is that, most value-oriented investors had to make the leap of faith, as did we, into this idea that this is one of these times where valuations are higher than normal due to the potential for this productivity bump from AI, and due to the fact that there's just an enormous amount of liquidity in the system right now. And so it's put it this way: if we get to a point where people are no longer questioning valuations, that's when we're going to start worrying. We hope that time doesn't happen.
What's screening well for you guys these days? Is it a sector? Is it a factor out there? What's screening well for you guys these days?
Well, interestingly, what we like is this concept of low leverage, okay? And normally you might think that would be something reasonably defensive in anticipation of a downturn. But no, what it actually is a manifestation of corporate America's ability to generate free cash flow. And in fact, lower leverage happens to be found in some of the marquee names across technology, for instance.
How do you dovetail in Krishna Guru's work? I mean, he's acclaimed as a Fed watcher and all that. Are you on an Emanuel Warshwatch? It's a mouthful. A Warshwatch.
I think the concerns around the hawkishness are probably overdone. If you think about Donald Trump's propensity to nominate an overtly hawkish Fed chair, it just doesn't make a ton of sense. Krishna's view is that this year is stronger, not hotter, which actually will give the the Fed chair an ability to cut rates again, a boost for the economy and markets.
Bring it down to basics. Like people that don't read your fabulous earnings summary, your conviction to buy new shares here. I get it if somebody's on board this bull market, but do you have a conviction that you should acquire shares here?
So this is how you think about bull market cycles, okay? And it makes sense when you think about the last year in particular. Lots and lots of macro noise, lots of things to disrupt the narrative, scare people. At the end of the day, earnings kept going, and the four things that we think are hallmarks of the end of a bull market: a recession, a Fed that's more likely to hike than cut, longer-term yields moving, dramatically higher. By that we mean closer to 5%, and then overt FOMO or incredible capital markets intensity. None of those have been present, and so for us, the recipe is the bull market has further to go, and if you're underinvested, you probably want to get to where you feel like you're reasonably fully invested.
We haven't really talked about the Fed here. We're going to get a new Fed chairman. I guess we're getting rate cuts. How do you factor in just the Fed into your equity kind of mosaic there?
Well, again, you go back to last week, and that presser was fortunately, happily non-dramatic. Mm-hmm. Okay, there's all this, back and forth in the background, and at the end of the day, the message is the economy is doing fine, thank you very much, and that we will end up being in a position where at some point in the future we will be able to reduce rates on a measured basis.
Julian Emanuel, thank you so much. Can't say enough about it's not every day. It's like every 3 days you put out your earnings summary.
Oh, no. We every day during the season.
Your team is putting it out, not you.
Stephen Fandozzi, Mike Chu, and Barack Hurwitz. Superstars.
There they are.
Excellent.
Julian Emanuel, thank you so much. Evercore ISI, I really appreciate it. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
The great thing about billions or industry is there's always a wacko economist who studied social studies at Harvard and became actually hugely acclaimed in housing economics and wandered over to see Adam Posen at the Peterson Institute. That must be Jed Kolko with us right now. How in God's name did you end up at the Peterson Institute? How did that happen?
It is where some of the most thoughtful and impactful economists are. It's a great place to be. It's a fantastic community, and Adam's wonderful.
Was it like a one-hand in the Washington Post, or
Well, I used to be the chief economist at Indeed, so of course I have to tell you that it was. It's one of those jobs that happened outside of those postings, but it's great to be there.
I got to ask one housing question here before we get to your important work at Peterson Institute on the American labor disaster. You own granular housing research. You did, as far as I'm concerned, you did it before anybody else. With all the data we now have in the internet about housing, what's your summary of 12 months and 5 years forward in residential housing?
So we are at a point where, of course, rates are still high. There is strong construction on the multifamily side, but residential construction is where both tariffs and immigration both pose a risk. Those two big policy uncertainties are headwinds for residential construction. And the good news is that prices are not rising as fast as they were, so there might be some easing of affordability concerns. But we went from a world back when we talked in the days that I was at Trulia, I lived in San Francisco, and everybody talked about housing affordability, but it was thought of as mostly a local issue. Then, a few years ago, when I was at the Commerce Department, traveling around the country, talking to mayors, economic developers around the country, every place felt that housing affordability was one of their biggest labor market challenges. Rapid City, South Dakota, Syracuse, New York. Mm-hmm. I would go there, ask what's holding back economic development, and the answer was, we don't have enough housing. And I thought, really? This is... I think of this as a San Francisco and New York issue, but it became a nationwide issue. I hope now, as we're seeing more construction, particularly on the multifamily side, those price increases are easing. But tariffs and immigration, both still are headwinds for construction.
Jed Kolko with us. He invented the internet study of housing for us at Trulia years ago. Back then, Paul, he was in San Francisco eating avocados 6 days a week.
Yep.
Green's Restaurant.
That's how they do.
Now he's at the Capitol Grill pounding down steaks with Adam Posen.
New York Strip. Jed, talk to us about immigration. One of the concerns when President Trump came to office and a much stricter immigration policy was, aside from any social issues, was the economic impact would be felt in a number of areas, including supply of labor, which would impact some really important industries like agricultural, like home building, like the service sector. I don't think we've seen that in the data, have we?
So we have seen that. Just start looking by the monthly jobs numbers.
Okay.
That headline number that we all watch, it used to be that we expected a break-even rate to keep the labor market steady of about 170,000 jobs a month. Now that's something under 50,000 jobs a month.
Okay.
50 today is a reasonably good number given how much more slowly the workforce is growing. And the main reason for that is the slowdown in immigration. Immigrants, of course, are disproportionately working age. When we have a huge shift in immigration policy that slows down the rate of immigration, the economy grows more slowly. We're seeing that particularly in sectors that rely on immigrants more than others: construction, home health care, food manufacturing. These are all sectors that have not grown in terms of their jobs or even shrunk in the past year under current immigration policy.
It feels underreported to me because, quite frankly, I've been looking for that in the news flow, and I don't see it. I don't see the beef factory, slaughterhouse shutting down for Cornell or whomever. I don't see these big companies saying we can't build the houses because we don't have the workers. We can't pick I haven't seen the stories where fruits and vegetables are going bad in California because nobody's there to pick them. I just feel like it's not happening.
Yeah, so in the data, we see it as flat or slow growth rather than faster growth. So it is not a decline of 10 or 20% in employment in these sectors. It's not a huge drop in production, but it means almost all the job growth has been in sectors that don't particularly rely on immigrants in the workforce.
If we get to 5% unemployment, is it the same? I mean, Adam Posen and I would know that in August of '64, the Red Sox were in last place. Is 5% unemployment now like 5% unemployment in 1964? I don't buy it.
So the biggest difference today with unemployment compared to 60s, 90s, 2010s is the relatively low unemployment rate is still hand in hand with very low hiring. It's a very low churn economy. Right now, the hiring rate is what we typically see when unemployment is close to 8%. Of course, unemployment actually is at 4%.
So say that again, that's critical.
So right now, the hiring rate, the rate at which employers are bringing new people on, is at the lowest level since 2012, except for a brief moment during the pandemic. That low level is typically what we see when unemployment is at 8%.
104% of our listeners agree with what you just said. Do you sense any urgency at the Peterson Institute for Washington with our moldy 8% unemployment-like economy?
So I think we see this in the consumer sentiment. We see this very clearly in surveys that ask people, how likely do you think it is you could find a new job if you lost yours? How good an economy is this for finding a job? So I think this explains some of what we see in consumer sentiment, but that is not the headline number. Of course, the headline number is the unemployment rate.
Okay, but you bring it over to where Warsh has to cut rates because we have an 8% unemployment economy?
So it is not an 8% unemployment economy. The hiring rate makes it feel like an 8% unemployment economy for people who are looking for work. And so we see this for young people. Young people are much less likely to be working than they were a year ago, even though middle-aged and older adults, if anything, are more likely to be working a year ago. So the pain in this low hiring rate is concentrated. It's still a strong labor market if you already have a job. Real earnings are essentially at record levels. So it's a very strong labor market for people who have a stable job and are not worried about losing and having to find one. But it's a very tough market if you need to get a new job.
What role does AI play in the labor market, i.e., we don't need as many new workers in the economy because AI is making the existing employees more efficient. Do we see that in the numbers?
We don't see it yet.
Okay.
This low hiring rate is not because of AI. The hiring rate has been falling even before the public launch of ChatGPT. The low hiring rate really started after the pandemic and the pandemic recovery, when there was some overhiring at many firms. Of course, the effect of AI longer term is anyone's guess on the labor market. There will be disruption. There will be rough transition. And there are lessons from history, from technological changes, even if the ultimate effect of those past lessons don't look anything like AI. We do know about what transitions look like, what disruptions look like. Disruptions are especially bad if they're geographically concentrated. They're especially bad if people can't easily move to new jobs, if they don't have health insurance benefits that let them easily move across jobs.
Let me get one more in here. You got Chad Bohn, you got Olivier Blanchard, you got the emeritus William Klein, one of my heroes. You get to work with these guys every day. The summation of Peterson Institute on tariffs.
The tariffs clearly pose risk. We see this in declining manufacturing employment. Some of the effects are still too soon to show up in the data. A lot of it is playing out in uncertainty. And so the risks from tariffs are definitely not behind us. Some of this is not even what we've seen yet in terms of impact on prices and output, but what is likely brewing because of uncertainty.
I got like 8 more questions.
I know.
We got to go. We got to summarize what we're doing for here.
You got to come back.
Jed, you got to come back. I mean, I just want to talk Zillow and Trulia. And, I mean, folks, I can't emphasize enough. Jed Kolko invented the madness of our internet real estate world. I mean, you're at home sitting on the couch.
I pass by a house.
You look at like 6 houses on the Jersey Shore.
Right. Yep.
All
the time.
It's all Jed Kolko's
And I
fault.
tell you, it makes you a much better consumer. You know what the comps are.
Are we better consumers now in real estate, Jed, quickly?
We are better data nerds.
We are better data nerds.
Yes, and I'll take that.
Good. Jed Kolko, thank you so much. With the Peterson Institute. Brilliant. We'll get him back in here again. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
The book is The Doom Loop, Why the World Economic Order is Spiraling into Disorder. This is shockingly gloomy for such a nice guy. Let me explain Eswar Prasad to you. If you are Raghu Rajan out of Chicago, Robert Rubin, the former Secretary of Treasury, he codified the word likelihood in terms of probability. Summers up at Harvard and Janet Yellen from the University of Brooklyn. The answer is, who do they listen to? They listen to Eswar Prasad on the China Watch at the International Monetary Fund and legendary at Cornell. This is a really important book. Why are you so gloomy? This is not like you. What is the doom loop?
I did not start out being gloomy, Tom. In fact, the book I planned to write was a very different book. It was about how we might be moving from a unipolar world, where after the collapse of the Soviet Union, the US became the dominant power in every respect, to one where economic power is more evenly balanced. And as an economist, one thinks competition is good for balance, efficiency, and stability. But as I thought about all the forces that I was going to argue would push us back to a more stable world, a more stable equilibrium, I began to realize that each of these forces might actually generate more instability rather than stability. So the book ended up being one about where economics, domestic politics, and geopolitics, which always go on parallel tracks, they intersect with each other. But in this case, they're feeding off each other into a negative loop, a negative feedback loop, and bringing out the worst in each other.
So your publishers didn't say make it gloomy so you could sell the movie rights?
Tom, as I was writing this book, my heart was pulling in one direction, but my head was pulling in completely another direction. And I think the reality is that, we are in a difficult world right now, and the book ultimately is going to help us at least understand the forces that brought us here before we think about solutions.
Professor, I think most of our listeners, most of our viewers grew up in a world of globalization. Is globalization unraveling right before our eyes right here?
So globalization was once seen as a positive-sum game, which would offset the zero-sum game of geopolitics. The US-China relationship was a perfect example. The two countries could not, come to terms on certain geopolitical issues, but the economic relationship was seen as one that could benefit both countries. But now even globalization is being seen as a negative or zero-sum game, where even there are no common benefits to be had. And it's worth thinking about what happened here. Globalization did deliver aggregate benefits, but these were not well distributed within countries or between countries. So within countries, in both advanced and emerging market countries, it created this sense of a disgruntled community that essentially felt left out of opportunity. And that infected domestic politics, which in turn is hurting geopolitics.
I would mention Joseph Stiglitz there, just absolutely definitive, his book on discontent among globalization decades ago. Eswar Prasad with us. The book is The Doom Loop. We're going to continue here with Professor Prasad of Cornell. Paul?
So where do we go from here in terms of an economy that is a global economy? Technology has really reduced distances, and it just made everything more tangible here. How do we go back to something less global? And should we go back to something less global?
So what we are seeing is not a complete retreat from globalization, but it's becoming fragmented. So countries are sending more trade and financial flows to countries with which they're geopolitically aligned. So trade and finance, rather than being bridges across the geopolitical rifts, are in fact deepening those rifts. And the same is true of technology. That was what, in my cheerful version of the book, was going to be what led us all to a better place. And it is creating enormous progress. But at the same time, as I point out in my book, it's creating much more economic and financial power concentration within countries and between countries, which is where the dissension comes from.
You know how I do this, Eswar? I picked up the book and I went to the index and I looked for Carney in Canada. Carney of Canada stopped Davos talking about the middle countries in a new variable geometry. Discuss that geometry within the Doom Loop.
So when I think about the superpower competition right now, you have these two on both sides and everybody else is stuck in the middle. My European friends don't like it when I say this, but Europe is sort of a middle power because it's not grown up to be a real power on its own. So everybody else is stuck in the middle of these two very unsavory alternatives. The US is receding from its leadership role in the world economy. China is not seen as a trustworthy and reliable ally. So take what India, the archetypal middle power, does. On issues like cheap oil, it aligns with Russia and China. But on the other hand, it sees its fundamental values as aligned more closely with the West. So it teeters from one side to the other. So Mark Carney took a very pragmatic approach. He pointed out, as I in my book, that the middle powers include rich and poor, small and large countries. Their interests are not perfectly aligned, but he argued that maybe they should align on specific issues, which makes sense. The problem is it doesn't create deep trust that is necessary to underpin strong alliances. So the middle powers themselves, again, a chapter of my book, rather than being sources of stability, are becoming sources of instability themselves.
Do you have an analog back? I mean, President Trump loves to go back to McKinley and the Gilded Age. We'll get to tariffs here in a moment with Eswar Prasad. But to finish up on the Doom Loop, here, do you have an analog of, as Paul mentioned earlier, almost a nostalgia for a different time and place? Or are we going to a new that we've never seen before?
The fundamental problem right now is that if you think about the competition between the US and Japan in the 1990s, the US and the Euro area in the 2000s, it was about economic competition. But now the competition between the two powers is completely different. It's about their visions of the world, about how to organize an economic, political, legal system. So I don't think there is going to be an easy way at all for these two visions to be merged. So I think we are stuck with the doom loop for some time to come.
What is the role of the U.S. in this new world order? I mean, is this just a Trump issue? And if we get somebody new in 3 years, the U.S. will try to reassert its leadership position. How do you see the U.S. moving forward?
Well, Paul, I wish that was the case, but I should point out that I finished the first draft of my book in October of 2024. I put it down and thought, my God, this is too dark. Let's wait for the elections and maybe things will settle down. But everything that has happened since I finished my first draft has only validated or supercharged the thesis of the book, which is unfortunate for the world. But I think the issue is the U.S. is now receding from its leadership role, but it's causing some other countries to stiffen their spines. Europe is coming together at one level. The question is whether there is a political will, not just to deal with territorial integrity attacks, but to do what is necessary to improve productivity, to come together, to reshape institutions within these countries and for these countries to basically get their acts together.
What do you perceive, Eswar Prasad, to Paul's wonderful question here about after Trump? I mean, if he's established some form of neo-mercantilist zero-sum structure, where are we 2 years or 3 years after Trump?
It's going to be difficult to reverse, but as I point out in the book, there is a ray of hope at the end. If we as citizens are willing to become much more engaged, not just as citizens of our countries, but of our communities in the world, if we have more inspiring leaders, and if we can repair our institutions, I think there is a way forward. But it's going to take a lot of work.
The book is a doom loop. I got to move on to terrorists. I got Eswar Prasad in the studio, and he owns the high ground. I'm in the camp, Eswar, that tariffs we've lost sight of, and yet they drag on. There's almost an inertial force to the effect of tariffs on our listeners and viewers. Is that true?
It's certainly going to have an effect. I mean, it's hard to imagine that tariffs are not going to affect both, consumer welfare and also prices. Certainly, there have been other forces such as phenomenal productivity growth in the U.S. that help tamp down inflation. But, the notion of lean means supply chains that are delivering better goods, better choices for consumers, that is sort of gone. And I think the bigger issue, which is going to last for a while, is the fact that we now have this fragmentation of global trade, which, again, is bad from an economic perspective for businesses. Businesses are retreating and worrying more about resilience rather than efficiency. This is not good for the world economy. And most importantly, as I argued, trade is not helping to bridge countries anymore. It is creating even deeper rifts, and that I think is the fundamental problem.
I've known Eswar for like a million years, and this is just shocking to hear the doom loop from Eswar.
Exactly. Does this fracturing of global trade is that an inflationary force? I mean, will prices go up for us because haven't we gotten used to over the last 50 or 60 or 70 years?
This is the heart
just getting
of the matter.
The cheapest widget. The widget I have to buy, it's a lower cost because it's built somewhere where their costs are lower?
So businesses always face a lot of risks, but now they face, supercharged risks in terms of geopolitical risks related to climate change. And how are they responding? They're responding by pulling production back onshore. They're trying to diversify, but that creates its own risk because, friends today might become rivals tomorrow, as we've seen from President Trump's tariff policies. So that means that you're going to lose a lot of efficiency in the name of resilience. And certainly resilience is good for businesses, but it is going to mean higher costs for businesses, and that's going to get passed on to consumers. So it means less choice, higher costs, and more importantly, all of this behavior by businesses, it once again means that they no longer a stabilizing force. Geopolitical drifts are going to create even more instability and strife.
Well, let's go to your claim on currency and on China as well. The stealth thing here, folks, we've barely covered it, is very quietly yuan, the renminbi, is strengthening through 7 and stronger. I mean, do you perceive a Pacific Rim strengthening here in a weaker U.S. dollar, what President Trump ultimately wants?
It's worth thinking about exactly what the conjuncture is here. The U.S. is driving away countries' trade through tariffs. China at the moment has a very unbalanced economy. It's growing largely through exports. It registered a $1.2 trillion trade surplus last year. And the rest of the world is terrified about going too close into China's embrace because it would mean being swamped by Chinese exports. Given where China's trade surplus is, certainly the currency should be appreciating a lot more than it is right now.
So between carning up in Canada and whatever's after President Trump, Republican or Democrat, to Paul's question, the bottom line is after Trump, if China's troubled, we just reaffirm what Paul was talking about, globalization.
We could. And in fact, the U.S. potentially has the ability to re-engineer its place on the world stage. But I think some notion of trust has been lost. This is not the first Trump term. This is the second Trump term. And as I speak to, policymakers around the world, their view is if the U.S. can elect Trump not just once, but twice, how can we ever go back and trust the U.S.? The U.S.'s closest allies, NATO, Canada, and so on, are feeling the heat from Trump. So no country feels that it's going to escape what might be internal political dynamics within the U.S. that turn it away. So there is a place for the U.S. It's going to take a lot of work to reclaim it.
So just the European Union, can we expect the European Union to finally get its act together and maybe get its position on the world stage commensurate with its population, commensurate with its GDP?
moments of crisis do sometimes, Paul, tend to bring out, the best in countries. And certainly the European Union, the Europe overall, came together when its territorial integrity was threatened in the context of Ukraine, in the context of Greenland. The big question for Europe is whether it can get away from its internal political divisions to do what is needed to become a true economic power. This will require, deregulating in order to increase productivity growth within the zone, true economic union that goes beyond just monetary to banking union, to payments union, and a more significant political union as well. I don't see that happening.
Yeah, I was going to say, we got to run here, but that's a hope and a prayer.
That's exactly right.
I mean, if Lagarde was sitting here, she'd say, that's all brilliant, Eswar, but there's no indication Europe's going to get their act together.
Europe could be a great power. It's going to be a big challenge for it to get there.
This book, Paul, is like, what's the response of people in the racket when they see the doom loop?
The response is, this is a book for the moment. I mean, it tells us exactly why we are where we are, because there is a lot of turmoil around us. And when I started working on this book, it was my objective really to understand what are the forces that got us here, because we need to get there first before we can think about solutions.
I'll throw it out on LinkedIn and Twitter, folks. A doom loop, why the world economic order is spiraling into disorder. A shocking book from Prasad of Cornell. Eswar Prasad with this book, and I just can't imagine Mark Carney reading it. We'll have to see if that happens. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Alexis Christoforous in here to get us started in the newspapers. Is it hard? I'm seeing so many, I wish Alexis would do this story. Is it like too many stories to pick?
Sometimes it's feast or famine, really, when you're doing the newspapers. Today wasn't too bad, and I got a good one to start us off. So the big game just a few days away, right? Patriots, Seahawks. The Super Bowl scams, they're all around us. If you're looking for last-minute tickets, first of all, you better have deep pockets. But you've got the fake emails, the fake texts, the social media ads. They're everywhere.
Yeah.
And more, the NFL is wanting you to come in with a digital ticket, not a paper ticket, because now they can track the digital ticket, which makes sense.
Gotcha.
So you want to be wary of third-party sellers that appear to have a lot of tickets.
Thank you for doing this.
Yeah, we try to serve the people.
No, but this is like a huge deal.
Yeah. I mean, and people who, look, it's sad because you think you're buying a legit ticket, you get to the gate and they tell you, guess what?
It's about the paper. You just got to go digital from a reputable source.
Exactly. Yeah. So check the source, make sure they are reputable, check the ratings, check the reviews before buying. And you know what, folks? Buy with your credit card. I think we kind of all know this. Don't buy, no wire transfers, no direct
that's nuts.
Deposit. No.
You got to, I mean, the names that we know, Paul, like Paul's got a real life, Alexis and I don't. But like Ticketmaster, StubHub, those kinds, SeatGeek, they're legitimate, right?
And I learned it the hard way. I picked one that came at the top of my search for the Eagles tickets.
Okay. Yeah.
Day of flying out to Vegas, found out that those Eagles tickets were bogus, and they were not cheap.
Yesterday, folks, I can't tell you the scams. What a shock. An offspring needed an airplane ticket. I'm shocked. Okay, first one in February. I go on, I do a search, Google, and the people I used, there was a fake account of them up top.
Jeez.
And when I went to it, I clicked on it because the same name.
Yep.
And I could tell it was a scam.
Good for you. Yeah, well, they're getting smarter and smarter. And
Be careful. Tell your kids. I'm telling my kids, all the vet bill got taken.
Did you get your money back, Paul?
No.
I'm really sorry about that.
That was not good.
All right. Well, as we wallow in that, still have
Next.
another cup of coffee. All right. This one from Business Insider. Tailors in New York City have noticed a growing trend. Clients are getting their clothes altered thanks to the weight loss drug Ozempic. So they're saying that usually people would come in and say, listen, take out the pants a couple of inches or two. Now they're coming in with their entire wardrobe saying, I lost 20 and 30 pounds. You need to bring my clothes in.
Okay.
One tailor even said he had to bring more people on because he has just too much work for himself.
That's funny.
Right. It's a good problem to have. He says instead of altering clothing, some are just going out. This is what I would do.
Yes.
Just going out and buying whole new wardrobes.
wardrobe.
Right.
I'm shocked.
Sure.
And when they do, what are they looking for? Slim fit, shorter jackets, and this I can get behind, less shoulder pads. Remember back in the 90s?
Yeah,
I had so many jackets when I was doing this. Coming down like I was a football player. All right, so glad to see that the tailors are in business. And lastly, this is from the New York Post, a sneaker collab between Nike and, of all places, Costco.
Okay.
It is sending the sneaker world into a tizzy. So this sneaker collab, it's called, this is a mouthful, Nike SB Dunk Low X Kirkland. They're exclusive to Costco, released in New York, Oregon, California, Washington. So they were going for $135. In just 3 days, the resale market skyrocketed 200%. In some places, these sneakers are going for $1,000 on places like eBay and StockX.
So it's a separate style for Costco?
Yes, okay, exactly.
It's I saw Lisa Mateo wearing those. I think so. I think she could sell.
Hopefully, she didn't spend $1,000 on them. Okay. But so the insole, it features, this is kind of cute. It features the Costco affordable hot dogs, those famous hot dogs that go for $1.50. So there's a picture of those on it, and the Kirkland logo.
Okay, I'm looking at it now. Very interesting. All right.
Yeah,
I mean, it's not like a crazy design, but people love it, I guess.
I don't know.
Alexis, thank you so much. The newspapers today, just brilliant. Alexis Christoforous.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.